Hello and welcome to Rask Australia. My name is Owen Raszkiewicz. I'm the lead investment advisor of Rask Invest. In this video, I'm going to explain to you some of the steps that you can take right now to really stress test your portfolio in a time of market uncertainty. Some of the steps I'm about to explain to you will require you to access the company's annual reports and also to have access to your share brokerage account. This video comes as a result of our members asking us how are our companies placed to deal with a market crash and how are we going about finding opportunities that will inevitably come from this downturn. The first thing that you need to do is you need to consider your personal financial situation. So how much debt versus how much cash do you have personally on hand to deal with the potential that you may have to cover the cost of living expenses for a while if you no longer have an income? If you do not have your personal finances sorted, that should be your first point of call, not investing. The second thing to ask, and this is something that you need to do by logging into your brokerage account, is to ask yourself, am I comfortable with the shares that I currently own? This is not just limited to shares. It could be ETFs, it could be managed funds, it could be just about anything that you have invested in. It might even be some assets that you don't necessarily access from your share brokerage account or some other place where it's on a computer screen. For example, any assets that you have gathered in your garage, or perhaps you have an investment property of something like that. What you need to do now is take stock of everything that you own and one by one go down that list and ask yourself two questions. Number one, do I understand what I'm invested in? We are big advocates for understanding your investments. You don't need to be an investment analyst to know what you're invested in and the basic idea of why it can create value for you over the long term. The second thing is knowing how the company or investment that you have is going to respond to the current information in the market. So what I mean by that is, how is the business or share or ETF likely to respond to what we're seeing in the market crash at the moment? Finally, I want to stress home this point, that it's really important that whatever you are invested in, you would be comfortable owning for at least the next 3 years. Typically, bull markets and bear markets move in cycles. Bear markets and market crashes tend to last a few years at least. So it's important that if you have invested money or you have positioned yourself, that you would be prepared to ride out some pretty nasty ups and downs in the market over the next few years. Step 3 is really understanding your personal plan. So what are you doing to prepare yourself to take advantage of opportunities and to have cash in the market so you can take advantage of the upward swing that will inevitably come from markets? And so the way you can think about this is pretty simple. All you have to do is write down on a piece of paper what you're going to do over the next 1 to 2 years, maybe even 3 years, and break it down into small steps. So, for example, if I had a large chunk of money to invest, I wouldn't invest that all at once. What I would do is I would break it up into monthly chunks and then separate that over the next few years to really plan my attack as I go to the market. So I might be using something like dollar cost averaging, which is where you invest regular amounts every week, every month, every fortnight, or even every quarter, depending on however you are paid or you receive money, or however you break up your big chunk of money that you have to invest right now. Step 4 is all about the companies. So now we're moving into actually understanding each position in the portfolio. So here, I'm going to use some technical jargon, and we have other videos and courses on our website that will help you understand what I mean by this. But the first thing you need to find is the company's most recent balance sheet. So the balance sheet tells you at one point in time, what are all the assets and what are all the liabilities. The first thing that we want to do is determine how much cash the company has, which is an asset, and how much debt the company has. And that can be both a short-term liability and a long-term liability. Sometimes this is called interest-bearing liabilities. What we want to do is we want to compare the amount of cash to the amount of debt. So we have an understanding of what is available to the company as an asset short-term that it can use to keep itself afloat, and what it may need to pay out if a debt falls due. Now, it's not necessarily the worst thing in the world if when you calculate the cash minus the debt that you come up with a negative number. Some companies can handle having some debt, but the important thing that you need to do if your company does have debt is go into the financial notes, which are below the financial statements, and find out what the credit risk position of this business is. Now that might sound a bit technical, but all you really need to do is go into the section that lists any information on debts and find the maturity profile of the company's debt. So for example, let's say a company has $400 million of debt and $100 million of that is due to come up in the next 6 months. If the company has to find $100 million in the next 6 months, that might be a stretch for the business. So you've got to identify, hey, is this company going to need to go back to the bank at a time when it might not get the money? That is a risk, and if you find that that's the case with one of your companies, you might want to reassess your position. While we're also on the balance sheet, another thing that you should be looking for is anything else that looks like it could present a short-term cash flow issue. And there are two major things you should be looking for. The first thing is an operating lease, or you'll see it under liabilities where it says operating leases. These are leases or contracts that the company has entered into to effectively pay for things that it uses as part of its business. You're also looking for any other little fixed costs in this. So there could be lumped together in one line item in the balance sheet, but we're looking for any risks, for example, things that might need to be paid on, say, restaurants. So a restaurant needs to pay the premises, a rent, and that is typically a fixed contract which is represented on the balance sheet. The next major thing that you need to understand is on the balance sheet as well, and this is a little bit technical once again, but take your time with this because it is important. You're looking for two things. You're looking for the trade receivables line, which you'll see on your screen now. Trade receivables is the amount of money that is due to be paid to the company that you own. So, for example, if a company has $100 million of trade receivables on its balance sheet, will it actually get that money in a time of market crisis? And really the only way you can understand whether or not it will get paid its trade receivables is to look at two things. The first thing you need to do is go into the notes. Once again, this is below the financial statements. What you're looking for is any history of trade receivables not being collected by the company. And typically it will say in a table whether the trade receivables are past due or whether they're overdue and whether they haven't been paid yet. If a company has repeatedly fallen into the case where it is not getting paid by its suppliers or customers or whoever it might be, you need to understand that that may occur in the future and it may blow out. So it may not actually recoup any of the costs that it is incurred to deliver value to the customer. Now, the second thing that you can look for is just the absolute number of trade receivables. You have to put yourself in the shoes of the company and consider what the business is actually facing in terms of its customers. If you are looking at a company that is in, for example, the travel industry, at a time when travel is being very constricted, it is owed money from travel companies which are likely feeling the pinch of the downturn. So you've got to consider, by putting yourself in the shoes of the company, whether it will actually receive that money. The last thing on the balance sheet is the trade payables. And this is the amount of money that the company has to pay to its suppliers to deliver a product. So if there is a large trade payables number, you can be pretty confident that the company that you're looking at has to pay some money in the short term. Of course, your company will do everything it can, just like every other company would, to keep that money in its own bank account. However, sometimes these are legal contracts which require the company to automatically pay the money to its supplier at a certain time. So if the company has to pay this amount of money to its suppliers, then that will come out of its cash balance, or it may incur more debt to pay that bill. The bottom line here is, if you do not understand the balance sheet and all of the different liabilities and assets that are on it, you probably don't want to be owning the company. So you should reassess the position that you have and really think twice about the business's risk in the near term. There are two more things that you should be looking at, but one in particular I want to highlight in this video is the cash flow statement. Although people tend to talk about profit as being the holy grail for most companies, it is cash flow which keeps businesses alive. In times of market stress, it is cash flow that gives you the best indication of whether the business is viable. What you need to do here is you need to look at the operating cash flow from the last few periods. Maybe it's a couple of quarters, maybe it's a couple of years. Does the company have a history of generating high amounts of operating cash flow? And if you want to go one step further, you can even deduct the investing cash flows to get close to what we would call free cash flow, which is the ultimate measure of profitability of a company, because it tells you what the company has generated in the past based on its business model. So you're looking for generous cash flow and hopefully the ability to cut costs and keep free cash flow as high as possible. That means that the company can put more cash back on its balance sheet in the next reporting period. Ultimately, what we're doing here is determining whether you are personally prepared to invest in companies for the long run, determining whether you, as an investor, are prepared mentally for what might come next, and determining whether your companies are able to withstand some of the short-term shocks that may come, as well as the longer-term implications of reduced cash flow. Of course, you can use this model to identify companies that you think are actually really good buying opportunities. So on the one hand, we're trying to weed out all the bad eggs, but we're also trying to find really promising opportunities. And you can use this short checklist to do exactly that. And that's exactly what we're doing for Rask Invest members. The important thing here is don't rush your work. Even though the markets may be falling around you or jumping up and down, Don't rush your decision making, because it's your decision making which will hold you in good stead and enable you to take advantage of the best opportunities over the long run. Right now, more than ever, it's important to have good information and to act appropriately, to act rationally when you can. The only thing that's certain in a market crash is uncertainty. So be prepared that you may not have all of the answers straight away, and you may need to do a little bit more work to discover the answer you're looking for. I'm Owen Raszkiewicz. As always, you can find me on our website and you can take one of our free value investing courses, or you can find my investment research by clicking the link in the show notes. Thanks for watching.